Well, I think it's clear that hedge funds are getting very greedy. If you take a look at the top holdings that control 20% or more of the fluctuations of the S&P, Nasdaq, and Dow, your stocks like Facebook, Google, Amazon, Nvidia, Tesla, Microsoft, Apple, all of these stocks are at almost all-time highs right now. So the markets are being propped up on thin stilts. And these hedge funds, they're using these stocks as basically benchmarks, right? Whereas our portfolios, the mid caps, the smaller cap stocks, AMC, GameStop, Corsair, SoFi, Lucid, all these other stocks, they're currently being shorted into the ground. And a lot of this comes down to the Fed meeting, what's going to happen and what is priced in. All of this fear that is priced in that is going to soon reverse against them. You're talking big, massive rallies in AMC, GameStop, Corsair, SoFi, all of these stocks that have been shorted into the ground. And we're going to go over the market's anticipation of this Fed meeting, what is really priced in from this quick CNBC article. But then I want to go over Citadel and other hedge funds, really leverage levels. And once you actually see the dollar amounts that is behind all this leverage, it's really mind-blowing, and I think you can wrap your head around what I'm trying to say a little bit better. So let's get into this video, guys. Hit the like button for me if you have been buying AMC, if you're bullish, if you're excited, just hit the like button for me to let me know your sentiment on AMC. Consider subscribing to the channel as well if you want to stay up to date with all of this information around AMC and you just want an open, honest, and transparent opinion. There's always a chance I'm wrong. There's a chance I'm right. I don't really care as long as you get my honest opinion, because you should never take just one opinion and run off with it and go make a bunch of trades and lose or make a ton of money. That's never a sound investment strategy. But that's basically the gist here on this channel. Subscribe to the channel if you guys want to. Check out the pinned comment down below. Follow me on Twitter. Check out the link for the buy and sellers as well as public. Send your orders straight to the Lit Exchange. Get up to $1,000 in free stock, as well as help support the channel by doing that. Link for that in the description. So currently, AMC is down 3.33%. We were down to $22.53 per share. Overall, just a brief look at AMC. I just made a video about where we are currently at heading into the Fed meeting, and we're looking really good. We're right in between our support and resistance levels. We have tested the $20 support level, and we held up. So I don't necessarily think we're going to fall under $20 per share. I think if we were going to, that would have probably happened yesterday. And as we get further into this video, you will know exactly why I am saying this. Now, let's talk about the Fed meeting just briefly. I know we have talked about this many times, guys, but this is really what the investors, what market participants are expecting from the Fed. So this article says the Federal Reserve is expected to take a very big step toward a rate hike increase. Key points. The Federal Reserve is expected to announce a more rapid transition away from its easy policies after its meeting Wednesday, as it sets the stage for the first interest rate hike next year. The Fed is also likely to provide a new description of how it views inflation and acknowledge that it no longer views it as transitory. One wild card that market pros are watching closely is what the Fed says about its $8.7 trillion balance sheet and whether it tips when it might start to shrink it. And this is pretty important as well, because when the Fed buys all of these basically bonds and they are paying the interest for, or not, well, collecting the interest for these bonds, once they come to maturity, they can either let those expire and take those off their balance sheet, or they can basically buy the same bonds again to keep their balance sheet pretty much flat. And that's also a way of stimulating the economy. A lot less effective than obviously just buying these treasuries outright, just $120 billion a month, right? But it's still something markets are going to be watching for. But overall, I think the markets are being way too hawkish, because there's one thing that nobody can deny Fed Jerome Powell has done a good job of, and that is letting the market know when they are about to shift policies. The only reason the markets have been selling off so hard, and not really the indices, but the small caps and the mid cap stocks are getting beaten down, is because Fed Jerome Powell said about 2 weeks ago at basically the Senate meeting with the senators, with people of importance, right? He said that they're going to have to start, more than likely, increasing the rate of tapering. This leads to a possible rate hike increase earlier than expected. Now, I think the markets are kind of pricing in the fact that he's going to say, hey, we got to start raising interest rates like within the next 2 or 3 months to control inflation. I think market participants are thinking that is going to happen. I don't see any signs of Fed Jerome Powell saying that we need to start thinking about raising interest rates. I think he's going to say along the same lines of what he has said, that inflation is going to be high. We're going to have to start tapering faster, but we will let you guys know and we will communicate to the markets before we think about raising interest rates. That basically they're not thinking about raising interest rates right now. And that's going to cause a major rally in AMC, GameStop, Corsair, SoFi, all these other stocks that have been getting beaten down. In my portfolio, I know you guys are getting beat down in yours as well, especially if you're all in on AMC. It's the short sellers are getting greedy. Hedge funds are getting greedy. Why are they getting greedy and why are they doing this? I think it comes down to a couple key factors. They see an opportunity here to play the downside momentum, and they have extreme leverage ratios, which we're going to go over. And to really put this into like numbers for you guys, it kind of blows your mind that this is even legally possible. It really doesn't make a whole lot of sense to me. But even on top of that, they are trying to get better returns and to basically flaunt these returns to possible investors, because over the past 2 years, your retail investor, your everyday investor has gotten a lot smarter. I think people feel more comfortable now buying the S&P 500 index fund or just overall investing their own money. So if these hedge funds don't capitalize on every situation that they see at the utmost leverage ratios, they're not going to be able to return those percentages that you need to show your investors to keep that money in their funds. We see Citadel, we see all of these top hedge funds that are basically trying to restrict the amount of money investors can take out of the fund on any given year. I mean, if you had investments in Citadel, it would take 4 years to fully pull your investment out, regardless of what happens to the fund in the meantime. The fund could go down 50%. It's still going to take 4 years to get your money out. This is sounding eerily reminiscent to what we've seen in 2007 and 2008, which we will talk about right after this. So let's put this leverage ratio really into perspective for you guys. So Griffin Citadel, a leader in leverage. Ken Griffin's Citadel hedge fund is stepping on the gas again. Chicago-based Citadel appears to be the most leveraged of the 25 biggest U.S. hedge funds, with an implied leverage of about 8 times 8 investment capital, according to a Post analyst. It sounds like a lot, but it doesn't sound too crazy, right? Take a look at the numbers. Citadel had $142 billion in regulatory assets under management as of March 31st, according to an annual filing with the Securities and Exchange Commission. But it only had $16.1 billion in investment capital, commonly called assets under management, on January 1st. So they only have $16.1 billion of investors' money, but they are controlling $142 billion. That's insane. Nobody would let your retail investor get anywhere close to that kind of leverage. The best you can do is a 1-to-1 leverage ratio. So it's crazy when you put it into that perspective. And Citadel is really going to be a main leader in this downfall once the reversal does start. This goes on to say, Griffin, which runs the 21st largest U.S. hedge fund operation, ranks third in total regulatory assets under management, which includes leverage. Bridgewater Associates tops Citadel with $197 billion in RAUM, but has a more modest leverage of 2.3 times capital. Yeah, a little bit more modest, but still severely over leveraged. Compared to Citadel, not even close to in the same ballpark. It is followed by Millennium Management with $157 billion in leverage of 7.6 times capital. Leverage or borrowing ramps returns on the way up, but can amplify losses on the way down. And that's exactly what this says right here. Leverage is always a worry, and at 8.8 times blunt figure would raise anyone's eyebrows, said a longtime investor in Citadel's funds. But he said he was comforted by Citadel's excellent risk management. No way. They are getting greedy at this current moment. And exactly, take a look at this. Citadel's killer leverage came under scrutiny in 2008 when it had unwound a leverage of 8.2 times as the financial crisis unfolded. Its hedge fund lost 55% that year and took years to recover. Yeah, the risk management is great. They lost 55% in 1 year because their risk management is just so great. That's crazy. So I think it puts it into perspective when you guys actually hear the numbers of what an even small bounce in AMC, GameStop, Corsair, SoFi, these stocks, Lucid, with short interest at almost all-time highs. AMC, I firmly believe our reading that we're going to get in the next week or two from the exchange reported short interest data is going to come in at all-time highs. AMC short interest right now is estimated at 20.72%, and Ortex is very conservative. We just got a tweet from Ortex. Ortex, there's a lot of players out here. Ortex, that GameStop short interest has not been this high at 12.5% in the last 6 months. That is incredible. That is a lot of hedge funds that are taking on these very risky bets. Same thing with Corsair, 30% short interest. Lucid, all-time high short interest at 12.5%. These stocks have been basically falling knives, and you really don't know this unless you're invested in these companies or you look down under the surface, because the markets, they're down a little bit, but they're not down nearly as much as these other stocks that are literally in bear markets, with some of them dropping over 50%. And this is all due to mega shorting that is going on, that is going to lead to this mega bounce that I have been talking about. Now, the last thing that I really want to show you guys in this video is a tweet from Adam Aaron 15 hours ago. It says, a Canadian court just ruled that Regal/Cineworld, our biggest competitor in the US/Europe, must pay nearly $1 billion in USD in damages over the failed Simplex merger. Will be appealed, but anything distracting or destabilizing our biggest competitor brings opportunity to AMC. He retweeted this 4 hours ago, said, it is important that those who care about AMC see and reflect on this consequential news that came yesterday from Canada, potentially create significant opportunity in many ways for AMC. So if they can announce something after this Fed meeting, that is big. I wouldn't hold my hat on it, but if they could just speculate, announce on something, whatever they plan to do, any little catalyst will send the short straight to the cover button, per se. So that's basically going to be all for this video. I just wanted to go over this situation with you guys. The fact that hedge funds are return hungry right now just to keep investors' capital in their funds, because ultimately, if you had people trying to withdraw their money and you wanted to keep their money, you got to get good results. You got to use that leverage and go balls to the walls when things are bad, when things are good as well. So that's going to consist of just rapid de-hedging in general, short interest on all of our favorite stocks at almost all-time highs, if not all-time highs, like AMC, and nearly GameStop, secondary all-time highs after that 100% short interest that we had seen, as well as the leverage ratios and what is going to happen with the Fed meeting, why I think it's actually going to produce a very bullish response. So hit the like button for me if you guys have been buying AMC, if you're bullish on AMC, if you're excited, let me know that information. That is a good gauge for me as far as where your guys' sentiment is with the stock. Consider subscribing to the channel, as well as let me know in the comment section, what do you guys think about the Fed meeting? Does this make sense to you guys? Do you think we're going to see a bounce or a continued drop? And check out the links in the description, like I said, for public as well as the pinned comment down below. Follow me on Twitter if you guys want access to all of my buy and sell alerts. That link is also pinned down below in the comment section. So love and appreciate you guys. Thank you for watching this video. I will see you in the next one.